All right, so now other accounting changes. Just kind of walk through some of the more I'd say just conceptual aspects of these next two. So changes in accounting estimates, those changes are applied prospectively, meaning that I don't go back and restate anything. I don't report any cumulative effects on income or anything like that. I just basically apply the new estimate going forward. I don't amend anything. We have changes in reporting entity. You have to disclose the nature of the change and any impacts on reported income. Somebody asked if they're allowed to abbreviate on test. I'm trying to remember. So if there's any free response, as long as it's I would say as long as it's an obvious one, like RE being retained earnings, that's a great point. I would say, like, I can't think of any accounts that we might have to touch on where it's not obvious what we mean. So I think abbreviations probably would be okay. All right. As far as change in reporting entity, those are usually pretty substantial changes, and so you do need to report the impacts on that. And so there's a lot of disclosure when it comes to changes in reporting entity. You do need to report the current year's consolidated financial statements using the current state of the company, and so again, that can be a quite substantial change. The problems on the test won't be changes in accounting estimates, and it will not be a change in reporting entity. Yes, so again, somebody asked specifically if you did LIAB, L-I-A-B period for liability, if that would be okay. Absolutely, 100% okay. But as far as the consolidation, it's a big deal, but we're not going to cover that in this class. There's a whole class on consolidations in the MAC program where I'm sure you'll get to see a lot of things involving that.